What does 2019 bring us with sentiment where it is right now?
Yeah, no, I think 2019 is going to be an interesting year. I think the big difference today is that, up until recently, there has been no real alternative to equities. So if you looked around, U.S. equities actually look like the best game in town. Today, there's a better option, which is basically cash. Like if you look at cash yields, they're trading at 2.5%. The average dividend yield of an S&P stock is about 1.92%. So there is a competitive asset class, and I think that's what investors might be reacting to in their asset allocation decision. So our target for next year is 2,900, and here's what I think happens. I think we see a lot of volatility, a lot of 5%, even 10% moves in the market over the next 12 months. But the name of the game is focus on companies that are generating cash and sell companies that need cash to survive. That's our highest conviction call, is you basically look at your portfolio, you sell every credit sensitive stock that has thrived in an environment of zero cash yields and free capital, and you buy companies that are actually throwing off free cash flow.
And is the pain coming from the credit market that drives this?
I think it's coming from all sorts of different angles. It's coming from the Fed stepping back from buying bonds. So, the cost of capital on the long end is arguably slated to move higher. The short end is moving higher because the Fed is explicitly tightening. So you've got the cost of capital kind of across the spectrum starting to increase. And while there are nuances to the rates call, I think that on the margin, what's happened is we're moving from a 9-year wonderful period of free capital to an environment where the cost of capital is starting to move higher, and that's what we need to recalibrate our whole kind of existential
I think you make it
outlook
very
to.